Secretary of the branch, CA Prashant Kumar. Learned speaker of today's session, CA Ravi Kanth. Senior members of the profession, respected past chairman, my colleagues in the managing committee, my dear professional colleagues, a very good evening to you all and welcome you all to this virtual seminar of today's on the topic accounting standards for non-corporate entities. Firstly, we the members of Visakhapatnam branch convey our heartfelt thanks to the speaker of today's virtual session, CA Ravi Kanth, for accepting our request and addressing the members of our Visakhapatnam branch. The council at its 400th meeting considered the matter relating to the applicability of accounting standards issued by the Institute of Chartered Accountants of India to non-corporate entities. The scheme of applicability of accounting standards to non-corporate entities shall come into effect in respect of accounting periods commencing on or after 1st April 2020. For the purpose of applicability of accounting standards, non-company entities are classified into 4 categories: Level 1, Level 2, Level 3, and Level 4. Level 1 entities are large size entities, Level 2 entities are medium size, Level 3 entities are small, and Level 4 entities are micro entities. Level 4, Level 3, and Level 2 entities are referred as micro, small, and medium size entities, MSMEs. The criteria for classification of non-company entities into different levels are given as the small and medium enterprise SME used in accounting standards as a micro, small, medium size entities and MSME. So level 1 entities are required to comply in full with the accounting standards. Certain exemptions, relaxations have been provided to level 2, level 3, and level 4 non-company entities. Applicability of accounting standards and exemptions or relaxation to many such issues are involved in this accounting standards applicability to non-corporate entities. To enlighten about all these issues involved in these accounting standards applicable to non-corporate entities, we have a learned speaker, CA Ravi Kanth, with us today. Now we request Shri Sridhar Andavarapu to introduce the speaker of today's virtual session, CA Ravi Kanth. Unmute చేయండి. Sridhar, yeah.
Yeah. Okay. Good evening, everybody. CA Ravi Kanth Miriyala. He is practicing in the name of Messrs. Ravi Kanth Payment Associates in the city of Bangalore. He has cleared all the CA exams in the first attempt, and he made the life of the students easy through the Made Easy publications in the areas of India's Made Easy, financial reporting Made Easy, accounting standards Made Easy for the inter and finance students, and auditing and assurance standards Made Easy. His another upcoming book titled as India's Ready Reckoner, which is yet to be published by the Taxman Publications, New Delhi. Regarding his work experience, he has completed the articleship from PricewaterhouseCoopers, Bangalore, and subsequently associated with them for 2 years. Subsequently, he worked as audit senior with Mrs. Deloitte AERS India, Hyderabad for 3 years. At present, he is practicing the profession in the fields of teaching and guiding the senior students for conducting seminars on IFRS and helping in convergence into India's financial statements. He has handled various India's convergence assignments across the renowned industries in India. He has also performed corporate trainings for the companies like Karnataka State Beverage Corporation Limited, TZD Group Hyderabad, CPDCL, Rural Electric Corporation, UV Inland Private Limited. He also conducted many seminars on IFRS at Chennai, Bangalore, Hyderabad, Delhi, etc. major places. He also conducted workshops on accounting standards for chartered accountants and the firm's members. He has conducted many other seminars in various areas that are related to the profession. He is actively involved in the teaching for CA final and interest students in the areas of financial reporting, accounting, and financial management. With these few words, I introduce CA Kanth to the August gallery.
Thank you very much, Sridhar. So now I request Ravikant Garu to proceed with his session.
Yeah, thank you, sir. Thanks a lot for your kind words. And thank you, Mr. Chairman and Sikasa, Vice, everybody. Good evening, everybody. So let us get into the basic questions first. The point is, as sir said, in the 400th meeting of council, they have made some changes with respect to non-corporate entities. Now they are going to target as non-company entities, right? And earlier there were only level 1, level 2, level 3 categories for non-corporate entities. Now they made into level 1 more addition has been happened. At the same time, with respect to applicability conditions, that turnover wise and borrowings wise, they have made some changes, and even there are so many exemptions, right? So before getting into this, one basic question, I'm not asking, just general which comes into mind, because many of the members and many of our clients are mostly non-corporate entities. One basic question may come, like whether accounting standards are strictly supposed to be followed. Is it our duty to comply with accounting standards? Yeah, and yes, obviously the answer is yes. It is very clearly said in preface to accounting standards, right? At the same time, one more question can be like, we are doing only tax audits. We are not filing, like it's not a company, we are not filing with MCA or anybody, right? So still, are we supposed, even for tax audit purpose, if I prepare financial statements, do I need to comply with accounting standards? Right, that is one more question. Yeah, even for that question, answer is going to be yes, you have to. And what is the implication if you don't? Yeah, first you are attesting, first a member is attesting the financial statements. So as and when you are attesting the financial statements, it's our duty that the financial statements are in line with, in compliance of accounting standards. And if it is not, obviously that leads to code of ethics issues, without doubt. All right, gross negligence, that is the first point they can pick it up, right? And let's get into one by one points. Yes, sir. So with this applicability, this amendment, whatever they have done it in the council meeting, that is going to be applicable for the financials which are commencing from on or after 1st April 2020. So obviously we are all preparing financial statements for 31st March 2021 now. So this, whatever the exemptions and etc. we are discussing is obviously applicable for that, right? And is it applicable? One more small point they have kept. They said, if a non-corporate entity is complying with Ind AS, Indian Accounting Standards, as we know, it's like IFRS, equal to converged IFRS. Yeah, they said it is not applicable. This notification is nothing applicable to them who is following Ind AS. Yeah, one more question should come, obviously will come to us. See, for non-corporate entity, why Ind AS will be applicable? That is general, a basic question. Let me try to answer. See, first, non-corporate entities, as you know, like sole proprietor, it can be a partnership firm, it can be cooperative society, it can be a trust, correct? So any firm. So out of those forms of trust, basically, yeah, there are few trusts, right? That is real estate investment, investment trust, infrastructure investment trust. These trusts are listed and their scripts are obviously being sold in the even Indian market. Yeah, I think real estate trust approximately 3 to 4 only are there. Real estate investment trusts. So REITs, what do we call? All right. These, I mean, actually what has happened, SEBI has given a notification to them. It is a trust, but their shares are getting traded. So those trusts have to mandatorily comply with Ind AS. So obviously it is not applicable to a partnership firm, not for other cooperative societies and etc. Only such exceptional situations, yes, Ind AS is applicable to them. Right. So the next point, I mean, Ind AS is applicable. One more point with respect to Ind AS. Yeah, in Ind AS compliance, right? Suppose say one company Ind AS applicable, for that company's subsidiary also has to follow Ind AS. Yeah, subsidiary, its associate, its joint venture, its holding company. Ind AS is applicable to for all these companies. Right. But again, when I say subsidiary, the subsidiary need not necessarily be a company. Right. Recently, a small question came up. One company has investment in a partnership firm. All right. So that investment is obviously more than here in this question, it's more than 50%. So the question has come up whether that company has to consolidate. Is it as per accounting standards or is it as per Ind AS? The answer is going to be, yeah, consolidation for the company, it is mandatory, whether it is as per accounting standards or Ind AS. If I have more than, I mean, if I have control over the other entity, that's all. We are saying entity, then entity word is obviously very broad. It need not be a company. All right. So investment in partnership also will lead to consolidation. Right. So I have a control over a partnership firm. My company is complying with Ind AS. Right. Whether the partnership firm need to follow Ind AS. Partnership firm obviously won't follow Ind AS, but the financial statements of partnership firm has to be prepared in Ind AS only for the purpose of consolidation purpose of its holding company. That's it. Only for the purpose of consolidation, we are supposed to prepare in Ind AS. So anyhow, Ind AS is not applicable to non-corporate entities except those two different kinds of trusts where there is a SEBI notification separately. That's why we are supposed to follow that. All right, sir. Let's get into the preface. As I mentioned, preface to accounting standards, it says very clearly, paragraph 6.1. Yeah, while discharging their attest function, yeah, it will be the duty of the members of the institute to ensure that the accounting standards are implemented in presentation of financial statements covered by their audit report. So in the event of any deviation from the standards, it will be also their duty to make adequate disclosures in their reports so that the users of such statements may be aware of such deviation. So this, I mean, we can understand it very simple. So while we are performing our attestation function, obviously it's our duty, even though it's not, what is that? It is not a company. And to accounting standards, they said very clearly, when an entity is preparing general purpose financial statements, yeah, and other financial reporting, any other financial reporting purpose, then irrespective of its nature of entity, irrespective of its business size, etc., it has to comply with accounting standards. So while they are complying, yes, and as we are checking, attesting, we are doing the attestation function, it's our duty to ensure that accounting standards have been complied perfectly. Right. At the same time, what is attestation function? Just for your information, yeah, it includes, it's not just only financial statements preparation, that is obviously mandatory. In addition to that, any kind of consulting engagements, yeah, I mean, stock audits, even in case of stock audits also, when valuation is being done, even though it is not full-fledged financial statements preparation, right, whether the stock valuation is as per accounting standard 2, right, that also attracts, obviously, right. So it is representing a client before authorities. Yes, when you are giving financials to the authorities, everything with respect to tax returns, with respect to compilation of financial compilation, we are preparing the financial statements, we are not signing the financial statements. Even that also leads to attestation services. So all these are going to be, I mean, in all these cases, all these works will be falling under the word attestation. And while doing our job of attestation, the compliance of accounting standards checking is very much necessary, right, sir? Yeah. And the next question is already answered, right? As per audit, tax audit under section 44AB, correct? So are we supposed to follow this compliance of accounting standards? Yes, obviously, correct. We are preparing the financials, correct. In other than 3CD, whatever is the 3CA or 3CB, all right, that is, I mean, we are signing the financial, correct, right? That is the reason, whether it is prepared as per the Companies Act or even though they don't prepare the financial statements as per the Companies Act, we are supposed to sign there. Attestation function is involved. So obviously, compliance of accounting standards will be mandatory even in case of tax audits, yeah, irrespective of the entity, right? So next, what is a new classification? As we were telling, it's like now it's been into, it is going to be 4 type of classifications: level 1, level 2, level 3, level 4. Earlier there were only 3 classification, 1, 2, 3. All right, let's see what are the changes in these classifications. And I mean, so who will fall under, I mean, which entity will fall under which classification, because that is required. The reason, the notification itself says at one level, if we are, I mean, we are supposed to disclose it in the notes to financial statements. We are supposed to disclose in the notes to financial statements saying that we are falling into this classification, say level 2 entities, right? And we are claiming these exemptions, right? We are not following these standards, right? That information has to be disclosed, which should be part and parcel of our notes to financial statements. So that's why we need to have, I mean, idea about the exemptions and classification as well, right? Let me try my level best. Yeah, level 1 entities, as we said, I mean, it's large size entities. These large size entities, for this large size entities, obviously there is no exemption. Every standard, every accounting standard is applicable to them, right? Obviously exemptions are meant for 2, 3, 4. 2 is medium size, we say, and 3 a small size, 4 micro entities. Yeah, but it is like micro, small, medium size entities, we say MSME, that is level 4, 3, 2, reverse, referred to as micro, small, medium size entities. Yeah, now onwards we'll use the word MSME. All right, but MSME doesn't mean like 1, 2, I mean 2, 3, 4, it's like a reversal. Micro is going to be the 4th one, and 3rd small, and the 2nd is going to be medium size entities. Yes, let's have a look at level 1. Yeah, level 1, obviously it's a large size. All right, let me try to compare it. I mean, old, what are the wordings, and the revised wordings are what? I mean, because it's just some places only number change, correct? So that's why I don't want to write everything as it is. If I write only the difference, I feel it will be, I mean, anybody will catch it very fast. So old, what it says, non-corporate entities, yeah, which fall in any one or more of the following categories. If any one satisfies more than sufficient, correct? No? At the end of the relevant accounting year are classified as level 1. Yeah. Here it says, as I said, like earlier non-corporate entity, now it is non-company entities. That word is only just changed. All right. Now onwards, they call it as non-company entity. Right. Next one is, what are the conditions? Condition number 1, entities whose equity or debt securities are listed or in the process of listing in any stock exchange, whether it in India or outside India. Right. As I said, this point though obviously applicable to those trusts which I was referring to. Right. Otherwise, obviously a partnership firm, cooperative societies, and so that is this point only won't arise. Right. Now in the revised conditions, they have made it bit broad actually. Equity or a debt place they used the word securities. Yeah, in the place of equity or a debt, they said securities. Then obviously, as we know, securities word is going to be very broad. It includes everything, right? Shares, scrip, stock, bonds, debenture, everything, debenture, stock, marketable security, everything is going to be part and parcel of that word. It's going to be a very big definition under the Securities Act. Okay, but that is the small change what has happened. The next one is banks, including cooperative banks, financial institutions, or entities who are carrying on insurance business. Except cooperative banks, most of the things are obviously in company form, correct? So, but yes, they are all obviously falling under level 1. Right. Here there is no change. It is still the same wordings are continuing. All right. And the next one, yeah, here there is a change. All entities engaged in commercial, industrial business activities whose turnover, yeah, excluding other income, there is only sales part, sale of goods, sale of services, right, exceeding 50 crore in the immediately preceding financial year. Yeah, in the immediate, in the last year, if it is our turnover has gone up, it's exceeding 50 crore, then we were falling under level 1. Now that has gone to, it is exceeding 250 crores. If it exceeds 250 crores, turnover exceeding 250 crores now is going to be level 1. Right. So that is the first major difference. Right. So next point is all entities engaged in commercial, industrial, same business activities having borrowing in excess of 10 crores at any time during immediately preceding accounting year. He's saying the loans basically, but 10 crore rupees at any time. So we can understand any time in the sense, even though they have borrowed it, and as on the 31st March, there is no borrowing, they must have already repaid it. It doesn't matter if it was a borrowing during the period, right? Then obviously they will fall under level 1 in the preceding year. In the last year, obviously, then whether it is for applicable for the current year, then for these two items, we are supposed to look at related to last year. Yeah, but that 10 crore number has been increased to 50 crores. That is the change with respect to this modification. And here it is a holding or subsidiary entities of any one of the above. Yeah, here also, yes, holding, subsidiary, holding, one partnership investing into another, any kind of this control, yes. If it is applicable to parent, it is applicable to, if one parent is level 1, irrespective of the individual category, partner, what is that? Subsidiaries obviously is going to be treated as level 1. Right. The same sentence is continued. There is no change. Right. So with respect to level 1, there are only, the equity and debt security is going to be a security difference, and turnover, it was earlier exceeding 50 crore. Now it's going to be 250 crore. And with respect to the loans at any time in the previous year. There was 10 crore earlier. Now it is 50 crore. They have increased. If an entity is falling under level 1 category, that is a large company, large entity will not get any exemption. It has to comply with each and every accounting standard, right? When I see level 2, yeah, in same way, level 2, obviously there are some differences here also, which is not level 1, first one. At the same time, it can, by satisfying any one or more of the conditions, it can be falling under level 2. Yeah, so here that is a small difference, that is non-corporate is becoming non-company. Now all entities engaged in commercial industrial business activities, the turnover clause, a turnover exceeding, that question mark is supposed to be rupees. I mean, it did not recognize, right? It is exceeding 40 crore. Sorry, 1 second. It is 40 crore. Yeah, sorry. It was 40 lakh earlier, old one, 40 lakh, but does not exceed 50 crore immediately preceding year. But now it has become very big difference. Like it is exceeding 50 crore to 250 crores, because above 250 is going to be level 1. Now 50 to 250 crore turnover category entities are going to be falling under level 2. Yeah, level 2 also is getting, I mean, good amount of exemptions. Every standard is not required to be followed. All right, but few exemptions are with respect to measurement, and few exemptions are with respect to only disclosure. We need to follow the standard, but only exemption is with respect to disclosure. Disclosures are just getting reduced. Otherwise, application has to be same. All right. Next, with respect to loans, earlier it was 1 to 10 crores. Earlier it was 1 to 10 crore. Now it has been 10 to 50 crore. If it is loans during last year at any time between 10 to 50 crore, then they will fall under level 2, right? And the last one, same, it continues, holding subsidiary entities of the above category. And that is that obviously there is no change in this regard. Let's look into the the third one. Third one, earlier what they said, which is an entity which is not level 1, level 2 is going to was level 3. But now since we have one more category called level 4, so then obviously they have to define it very clearly. Yeah, that's what. So with respect here, obviously this is only 3 conditions. If it satisfies any one of them, then obviously it's going to be part of level 3, right? So the first one, turnover related. If it is 10 to 50, it is exceeding 10 crores, right? 10 to 50 crores basically, then it is going to be level 3. And with respect to borrowings, it is 2 to 10 crore gap if it is borrowing any time. And the last condition is if it is a subsidiary of level 3, then the entity below entity may be level 4 on its own, but its holding firm is level 3, then it has to be level 3. Correct. So if any of the holding or subsidiary is level 3, then this one also level 3. That is the change what has happened with respect to level 3, right? With respect to level 4, they have given some information, but doesn't matter. Which is not level 1, level 2, level 3 is obviously level 4 entity. Level 4 being micro entity, they have given many more exemptions with respect to compliance, right, sir? So like let's get into one by one applicability and exemptions related. All right. See, I mean, as we know, there are totally 29 accounting. I mean, number 29 was the last one, AS 29, which is provisions, contingent liabilities, and contingent assets. But out of these 29, 6 has been withdrawn. Accounting standard 6, which was discussing about account depreciation, that has been merged with in the revised accounting standard 10, as we know. So now it's going to be a PPE, property, plant, equipment. And accounting standard 8 has been withdrawn long ago. That is research and development related. That has been part of accounting standard 26. This has been changed long ago. So because these two standards are not there, so totally existing applicable standards are 27. And in the meanwhile, I mean, accounting standard 30, 31, 32 has been issued and has been withdrawn. Both happened. So as of today, they are not in existence with respect to accounting standards. So only 27 standards are applicable, are in existence. Let us see what all going to be exempted. How many are exempted for level 2, 3, 4? Level 1, as we discussed, I mean, there is no exemption. All accounting, these are large entities. There is no exemption. It has to comply with every standard with respect to disclosure, with respect to measurement, recognition, everything it has to comply. Yes. So let's get into level 2, 3, 4. Yeah, fully applicable standards. I will be providing the list of those standards. I mean, what is applicable, what is fully not applicable. Yeah, fully applicable for level 2. I mean, no exemptions at all with respect to these 16 standards. Yeah, no exemptions at all. It has to comply with, right? With respect to level 3, 12 standards are going to be complied with, the required, mandatorily required. And with respect to level 4, it's 8 standards. These are obviously very basic standards. Yeah, these 8 standards are supposed to be complied, right? And fully not applicable. Yeah, here fully not applicable. I mean, nothing with respect to recognition, measurement. We don't need to follow anything. There are 7 here, obviously 9 here, and 11. Yeah, but there is still some gap. Yeah, that gap is because of some standards are not 100% applicable, but partially, paragraph wise, they have given some exemptions to level 2, level 3, level 4 entities. Yeah, so let us look into a few things. Applicable with disclosure exemption. Yeah, disclosure exemption, only disclosures are being reduced. You don't need to provide, say example, accounting standard 29. Accounting standard 29, provisions, contingent liability and contingent asset. With respect to provisions, there is a disclosure wherein we have to provide what is the opening balance of provision and what is the movement basically. Correct. What is the addition in the current year? What is the, I mean, utilization of it? If we have reversed it because we are not able to utilize the provision, then what is the closing balance? Like the movement from opening to closing, we are supposed to show it in one table format, right? That disclosure is not required. But it's not that accounting standard 29 is not applicable. Obviously, accounting standard 29 is very much applicable. We are supposed to comply with the provisions. We have to make the provision when the conditions are satisfied, right? Applicable with disclosure exemptions. Only mere disclosures are being reduced. That's it. All right. I mean, big disclosures with respect to accounting standard 19, accounting standard 22, right? Taxes on income, right? For taxation, basically, right? So that kind of standards are like 3 only with respect to these things. We'll go in depth, I mean, in detail about which all exemptions, what paragraphs are not necessary. Also, will be discussing in the given time. All right. And with respect to level 3, there are 5 standards related disclosure income. I mean, disclosures exempted. And with respect to the 4th category, there are totally 6. All right. Applicable with exemptions, accounting standard 15. Yeah, this is one small point. Anyhow, we'll go to the respective para and we'll discuss almost everything there. I mean, in accounting standard 15, that is employee benefits, they are going to say so many paragraphs are not applicable to us. That is true. But they are saying, except for entity, category number 4. And if the number of employees with the organization is 50 or more than 50, if the number of employees with the organization is more than 50 or more than 50, we are supposed to get actuarial valuation for the employee benefits if it is in long term or defined benefit plan. Say gratuity valuation, it is mandatory. It is mandatory. We cannot skip that. We are supposed to get the actuarial valuation. We are supposed to get the actuarial valuation for, because accounting standard 15 is applicable, even though they have told like some paragraphs are not applicable, still they made it very clear actual valuation is very much mandatory, very much mandatory. We need to obtain actuarial valuation, but that is only subject to which point? When the employees in the organization, average number of employees, they say. Again, average number of employees, we can take like opening number of employees and closing, year beginning, year ending. Yeah, you can say divided by 2. So that average you can follow. And if it is so, if the average number of employees are more than 50, actual valuation is going to be mandatory. All right, that's related to all the 3. Right, but if it is less than 50 members, then we can calculate in some rational and systematic fashion. We can do in our Excel calculation that amount can be provided as provision for gratuity or something, that is accepted. No need of actuarial valuation. They linked it now with number of employees in this amendment. And applicability partially, yes, accounting standard 22. Accounting standard 22, there is, but only for the fourth micro entities, fourth category micro entities. All right, they said only with respect to current tax, you make a provision. That is provision for a tax, advance tax, that's normal. Anyhow, every entity does it. All right, but accounting standard 22, that is deferred taxation related, is obviously applicable for level 2, level 3 as well. Level 2, level 3 as well. That is mandatory. No exemptions we are going to get from accounting standard 22. Since that is accounting standard 15, accounting standard 22. Yeah, generally we, in partnership firms and etc., we do not consider much. That is the reason I thought of putting it separately. Otherwise, there's nothing. Right. So that's how totally 27 standards are. This is how I have bifurcated to how many are fully applicable, how many are not applicable. But it is applicable, but with respect to only some disclosure exemptions have been provided. Right. But accounting standard 15 is one thing major, wherein I said if the number of employees with the organization is more than 50, whether you are under level 2 or 3, okay, level 2 or 3, then they are supposed to obtain actuarial valuation. And next, these are all the just a small list of these standards are applicable to all categories, irrespective. Anyhow, basic standards. Accounting standard 1, that is disclosure of accounting policies. Anyhow, we are disclosing the all accounting significant accounting policies at one place. That is one. And AS2, valuation of inventory, right? And AS4, contingencies and events occurring after the balance sheet date. AS5, net profit or loss for the period and prior period errors items basically, and change in accounting policies. And accounting standard 7, 8, revenue based. If it is into construction business, A7, right? If it is other than construction revenue, then revenue recognition would be suitable. Accounting standard 12, government grants and borrowing costs. Yeah, so these are all the standards which are applicable to, irrespective of the category, it is applicable to all of them. Right, and these are all not applicable. These are all not applicable to level 1, 2, 3 non-corporate or non-company entities. Yeah, accounting standard 3, they don't need to prepare any cash flow statement, and they don't need to prepare any segment reporting. Right, accounting standard 20, earnings per share, they obviously not necessary. Right, accounting standard 21, 23, right, 27. Yeah, 21, 23, 27. Except 27, these are all related to consolidation. And 25, interim financial reporting, in case whatever the reason, as per the bank requirement or any other requirement, if they are preparing financial statements for less than a year, then obviously right? Generally, accounting standard 25 is required, but that is not necessary. That is, I mean, strictly following, not necessary, right? So accounting standard 28, yeah, fully not applicable only to level 4. Fully not applicable to level 4. For others, yes, with some disclosure exemptions, small exemptions have been provided, but accounting standard 28, which is impairment of assets, yeah, which is mandatorily we are supposed to comply with. Next, accounting standard 22, yeah, I said accounting standard 22 is also applicable, that is taxes on income, applicable for level 2, level 3. Only for level 4, they said, with respect to current tax, it is applicable, right? Current tax is nothing but provision for tax or advance tax, right? That anyhow we will be making appropriate provision, that is sufficient, right? Next, with respect to some exemptions, these are all basically disclosure related exemptions which are not necessary. That let me take you through little bit. Accounting standard 10, which is property, plant and equipment. Yeah, here what they said, paragraph 87. Paragraph 87 is related to encouragement. I mean, encouraging the disclosures. They have given like this can be disclosed. It is an optional disclosure which is given, that they are saying it is not applicable to level 3, level 4. Okay, that is not applicable to level 3, level 4, right? It is every disclosure exemption has not been given to every entity. It is given only for few specific levels. So that we need to right. They are mentioning very clearly. So what is this paragraph? Paragraph 87 talks about. 87 says the enterprise is encouraged to disclose the following. One, the carrying amount of the temporarily idle PPE. Yeah, this separate disclosure, generally, as you know, we will be providing a table wherein gross block, accumulated depreciation, right, opening, additions, deletions, and closing balance, net number, and CWIP separately, right? Here, I mean, this was not mandatory, this was optional one. That optional one, they have said it's not necessary. The carrying amount of temporarily idle PPE, if there is any, and the gross carrying amount of fully depreciated PPE, so the net number is 0, but it is still in use. Yeah, we are using this. We can see in number of cases, right? I mean, the building value has become 0, but where are we? We are working in the same building, right? So such kind of situations we see in number of places practically, right? That details, obviously those are material things, material amount, material PPs are there, those are very much necessary, right? Next one is for each revalued class of PPE. In case if the company has it, if the firm has revalued, the option I mean, I can see hardly people do it. Revalued class of PPE, the carrying amount that would have been recognized had the assets been carried under the cost model. Okay, I mean, if I had not followed, what would have been my carrying amount? That number also I am supposed to show separately. As per the books, this is the revalued amount. And if I had not followed the revaluation, then what would have been my carrying amount? That also is optional. It is purely it was optional, it is optional. Now that point, it's saying it is not applicable to level 3 and level 4 entities. And one more thing, the carrying amount of PPE which is retired from active use and not held for disposal. Yeah, if it is as per accounting standard 10, if there is a PPE, if any plant, machinery, any kind of equipment, land, building which is retired, I'm not using it for my business activity, and if it is held for sale, generally, I mean, if it is held for sale, then we would have already measured it at either book value or NR, net eligible value. I mean, we'll bring it net eligible value, whichever is lower. If it is both, if it is retired from active use, I'm not using it much, maybe I'm using hardly in it, I mean 1 or 2 times in a year or something like that, and it is held for sale, We are just waiting for the party to come and, I mean, if any party comes, we are ready to sell it. Under that circumstance, we will bring it. That disclosure is separate. Yeah, this disclosure is different. The carrying amount of PPE, which is retired from active use and not held for disposal. No, I have it. I don't want to sell it. I just want to keep it. Maybe as like a standby. Fine. But those kind of PPEs, are also, I mean, it was encouraging, what is that? It was encouraged to disclose, but this paragraph is not applicable for level 3 and level 4 entities. Yeah, and with the next small exemption, this is also with respect to purely disclosure. This is a small, very small exemption, which is related to accounting standard 11, effects of changes in foreign currency, right? If the firm is dealing with any imports, exports, obviously, if there is foreign currency transaction, right, for them, I mean, what they are like, paragraph 44 says, I mean, that is not applicable, they say, for level 3 and level 4. For level 3 and level 4. Yeah, what is the paragraph is talking about? Disclosure is also encouraged of the entity's foreign currency risk management policy. Okay. I mean, foreign currency, what is the foreign currency, how much they are exposed to, and how are they managing that? I mean, are they entering into any kind of forward contracts or something? If there is any such kind of that was again encouraged to. That sentence itself says disclosure is also encouraged. That was not made mandatorily, but yes, it was there. That paragraph, we are saying for these small company, I mean small and micro entities, you don't need to follow this. You just forget about this disclosure of foreign currency risk management, right? And the next one is with respect to accounting standard 13. I mean to say here, so if accounting standard 11 is 11 or accounting standard 10, only disclosure exemption. So, I mean, we are supposed to follow mandatorily the entire accounting standard. That is irrespective of whether it is level 4 or level 3 or level 2. For all these entities, we are supposed to follow accounting standard, all these standards mandatorily and incomplete, except a small disclosure exemption has been provided to us. And when we see this accounting standard 13, accounting for investments. Yeah, as we know, like current investment, long-term investment, current investment, we measure it at cost or FMV, fair market value, whichever is lower. Long-term investment will be continued at cost unless there is a permanent or non-temporary diminution in value, right? So this accounting standard, I mean, this is also here only just disclosure exemption, only disclosure. And here this disclosure is again for the micro, the smaller one, right? The micro firms only are getting the small exemption. This hardly anything, right? I can say, but it was one small line which was written. Yeah, what they say, para 35 says other disclosures as specifically required by relevant statute governing the entity. Yeah, I mean, if respective government, I mean, say for partnership firms, obviously the Partnership Act doesn't talk about financial statements only, correct? So there is nothing specific. And with respect to any cooperative society or with respect to any trust, if the governing act is saying something to disclose with respect to investments, that we can further disclosure as per the respective act, you can ignore it. That is not necessary. That's what he say. That is with respect to accounting standard 30. And let's come to this standard, accounting standard 15, which I was referring to. Yeah, this employee benefits level 2 and level 3. Okay, average number of employees during the year is greater than or equal to 50. Okay, for them they are saying I mean, you don't need to follow the recognition and measurement. Yeah, with respect to short term accumulating compensated absences. I mean, short-term leave encashment, basically, which are non-vesting. Yeah, which are non-vesting. Right. And I mean, we are not going to pay a cash for the unused entitlement on leaving as well. Right. If it is non-vesting leave encashment, if it is non-vesting leave encashment, that to short-term point is short-term, because other long-term related things will come in the third paragraph. For those, I mean, we don't need to record any journal entry with respect to non-vesting. Right. There is a requirement. There is a requirement because employee, if employee, say example, 20 days is his holiday per annum. If he is working for 15 days, the organization may provide him. Next year you can take. Next year your eligibility is 20. 20 plus last year you have not taken. You can carry forward it and you can enjoy the leaves in the next year. But for that reason, we are supposed to record the journal entries in accounting standard 15. But that is not related, not required to be followed. That's what they are saying. Next. This is next one. I mean, paragraph 46 to 139, which will talk about the discounting of amounts. Yeah, with discounting of amounts, yes, as per AS 15, anything which is in long term, we need to discount it. Yeah, discount it using Government of India bond yield rate is supposed to be used, right? But that they're saying you don't need to follow that again. Here again, recognition measurement with respect to defined benefit plans. I mean, so much detailed discussion. I mean, they're saying nothing is applicable to us. But as I said, even though almost like important paragraphs of the standard, they are saying not applicable, but they came out with such a line. However, such entities should actuarially determine and provide for the accrued liability. This is the important point for discussion. Even though we do not do all accounting for planned assets and etc., but we have to get the actual valuation done for the gratuity provision or for any superannuation, if whatever it is applicable to the respective organization, right? That has to be done actual valuation. That is what very much mandatory. Right? This actual valuation is even applicable for the other long-term employee benefits. Any other long-term employee benefits, if that non-corporate entity is providing to their employees, there also actual valuation is mandatory. This is the point. I mean, because of these paragraphs, almost main sentences have been removed. I mean, they are saying it's not applicable. True, but actual valuation is not left to us. I mean, that is not exempted, which is mandatory, like level 1. That is one significant point I can say. And with respect to the, I mean, other entities, employee benefits here, this is applicable even for level 4. This is applicable for level 4. Level 4 with irrespective of number of employees. Level 2, level 3, whatever I am saying, if the number of employees are less than 50, and with respect to level 4, it is irrespective of number of employees. That means if it is a level 4 entity, even though it has more than 50 employees, it does not need to go for actual valuation. Yeah, but if it is level 2, level 3, for them, based on number of employees, exemptions are applicable to them. Right? If we see that, I mean, same paragraphs are continuing, sir, exactly here. Right? But only one small difference, what we can see, same paragraph number, exactly same thing. Only one small difference is actual valuation is not mandatory with respect to actual valuation is not mandatory. That's what is the sentence written there? Calculate and account for accrued liability under the defined benefit plan by reference to some other rational method. I mean, if it is a gratuity act is applicable, yeah, we can calculate gratuity amount. What is the payable amount, even in Excel, based on the employee service and etc. That would be sufficient. We don't need to get the actual valuation done. This is with respect to accounting standard 15 employee benefits. And yeah, with respect to leases, accounting standard 19 leases, purely disclosure related exemptions are given. Purely disclosure related exemptions are given for level 2, level 3, level 4. But there is, there is no exemption with respect to application. There is no exemption with respect to, application of the standard. Right. You have to follow the entire standard, that is for finance lease, operating lease, accounting. And as you know, when will this accounting standard leases will be applicable to us? Only when the lease is non-cancelable. Right. So if it is lease is non-cancelable, if the agreement says it is cancelable by giving 1 or 2 1 or 2 months, whatever, by giving a notice, then I don't need to come into accounting standard 19 leases at all. Right. So, but accounting, if lease is non-cancelable, accounting implication continues. You have to classify the leases from the lessee point of view and lessor point of view, either it is operating lease or finance lease. And both the point of views, your accounting or everything is going to be same. Whatever we are going to discuss is just purely disclosure related exemptions for all levels of entities. Yeah, only disclosure. There is no exemption with respect to accounting. So that means almost applicable. Just little work of notes to accounts is getting reduced. Otherwise, it is applicable to us. Yeah. So there was, this is with respect to operating leases. This is with respect to operating leases by lessee. Yeah. It was mandatory. What was mandatory? A reconciliation between total minimum lease payments at the balance sheet date and their present value. In addition to, the enterprise should disclose the total minimum lease payments at the balance sheet date, their present value for each of the, you have to give the what was pending for more, for not later than 1 year, 1 to 5 years, which we give the table actually. Say within 1 year gap, within 1 year, how much am I going to pay? And 1 to 5 years, how much is supposed to be paid? Total payments. Yeah, rentals. Total minimum lease payments is simply rentals. That we were supposed to present it, which is not necessary now. Done. Next, let's say total future minimum sublease payments. Okay, sublease payments, if there are any, that expected to be received under the non-cancelable leases as on the balance sheet date, that is also exempted. You don't need to provide a list of it basically. Next, this is also, this information also related to F point, a general description, right, of less significant lease arrangements. Right. It is not, what is that? What is the contingent payments, if there are any? If the agreement is, if the rental amount, most of the times rental amounts are fixed amounts. If it is contingent in nature, that is very rarely we can see, but yes, it is possible. But if it depending upon the performance, if depending upon the profits or sales, something very rarely possible. All right. If there is any, that contingent rent related information we are supposed to use to provide, now it is not applicable to 2, 3, 4. Yeah, these are all, with respect to existence, what are the renewal options you have got, purchase options you have got with respect to lease, that is also not necessary to be provided with respect to accounting standard 19, just operating leases by lessee. Yeah. And again here now, next same sentences, exactly same sentences. Here it is only the small difference you can observe it. Paragraph number is getting changed and the operating lease has become now finance lease. Yeah, that's it. Earlier it is a lease payment. Yeah, even still here also lessee. Right, lessee. So payments, our same category, which is with respect to finance lease also exempted. Right. Even in case of finance lease, lessee does not need to give all these disclosures. Lessee does not need to give all these disclosures. Right. And here it is like next point, totally 4 different type of disclosures they have given the exemption. So the paragraph 37, they are given some disclosure exemption, which is related to finance lease. Yeah, again, which is related, The earlier two exemptions are from the lessee point of view. The next two are from the lessor point of view. Yeah, here we are going to get the money, correct? Here, if it is a finance lease, lessor will be recognizing in present value. In present value, what all he is going to get, everything is going to keep it as, that is called net investment, we say. And gross investment is without present valuation is gross investment, correct? That how much are we going to get in 1 year period, and how much are you going to get in 1 to 5 years period, and more than 5 years period. This information was mandatory. Now that table information is not required. You don't need to give. If it is a finance lease by lessor, that information is not required irrespective of the category of the firm. Non-corporate entity, level 2, level 3, level 4, for all of them it is exempted, right? At the same time, general description of significant leasing arrangements, any significant terms and conditions are there, then that is also not necessary to be given. And accounting policy adopted in respect of initial direct cost. Yeah, as per accounting standard 19, they have given two options. Yeah, one is you can directly transfer it to profit and loss. Initial direct cost, I mean, if you had paid any brokerage fees, if you had given any incentive or any benefit to the lessee, that is outflow for us, right? How to account for these two? As per the standard 19, there are two options to us. And out of these two, first one is you can transfer immediately to profit and loss in the year you signed the agreement, right? And the second one, you can defer it and transfer it in the ratio of finance income, right? Because it's a finance lease. If it is a finance lease, then I will be recognizing finance income, that is interest income, right? In that ratio, you can transfer it, you can defer it and transfer it to profit and loss over the lease period with respect to the finance income ratio, right? Anyone, but whatever you have taken, that information also supposed to be given. That is still applicable with respect to it's category number 2 firm, and 3, 4, it is not necessary, right? And again, if there is an indicator of growth, right, growth, often useful to also disclose the gross investment less unearned income in the new businesses added during the accounting period after deducting the relevant amounts for the cancelled leases. And if there is such information, only you are supposed to give, otherwise not mandatory, right? It is rarely applicable paragraph, right? The next one is with respect to operating leases by lessee. This is also linked to what we have discussed, right? Cancelable, non-cancelable category also they have given little further information you are supposed to give. Same description and initial direct cost, accounting policy, same is apply. I mean, it's not required to be provided. Again, this is also purely disclosure. Accounting, there is no exemption at all to the entities, right? And this is one more point with respect to accounting standard 22, that is accounting for taxes on income, which refers to deferred taxation majorly. And so they are saying there is a very limited application for level 4, but for level 2, level 3, there is no exemption. We are supposed to continue to following. I mean, we have to recognize deferred tax liability, deferred tax asset if it is required. That will continue. Only for level 4, that micro entities, they are saying only with respect to current tax. As I said, I mean, this current tax payable as per the Income Tax Act, which is provision for taxation, and if there is any advanced tax, as we know, we'll net it off and we'll present net amount as a net amount of advance tax or net amount of provision for a tax. That will only continue. Rest of the things are not applicable. Rest of the things are not applicable for level 4 micro entities. And for other entities, accounting standard 2 is fully applicable. They have to make the deferred taxation calculation, and that is mandatory. I mean, generally the firm's level that is ignored, right? That's why this is applicable if it is other than micro entity, that we need to take care of it. On the first occasion, suppose, okay, this last para, what do we say? Sir, so far we were falling under level 2, level 3. Now we are coming into level 4 because of this classification change, right? If it is now we are, what should I do with respect to deferred tax asset, deferred tax liability, which is already there in the balance sheet? Yeah, if you already following deferred taxation, there was deferred tax asset, there was deferred tax liability, any one of them obviously, right? So now we moved on to level 4. What are we supposed to do? Yeah, they have given very clear and straight information. It should be adjusted with, yeah, it's something missing out here. Yeah, let me tell you orally. It should be adjusted with the opening reserves. It should be adjusted with the opening reserves of the current year. I mean to say that need not be routed through profit and loss statement. That need not be routed through profit and loss statement. It just, directly defer tax to your retained earnings, your profit and loss in the balance sheet, you just transfer it. Don't route it through profit and loss statement. Don't route it through profit and loss statement. That is what the guidance given by ICAI. Right, sir. Next one, with respect to accounting standard 26. Yeah, these exemptions are again only for, these exemptions applicable to level 2, level 3. Here also again, a basic disclosure exemptions, right? Disclosure exemptions. Yeah, here again, this accounting standard 26 linked with accounting standard 28 disclosures have been exempted. Yeah, 26 with 28. If we read the 90 paragraph, this is the only one paragraph, 1998, these two paragraphs are being exempted disclosure. For account, why not for 4? Basic question can come, right? Accounting standard 28 is not at all applicable for first level 4 entities. So micro entity will not test for impairment. That is not at all required. So that's why we have not given, right? Because if we read this, what are the exempted points, it is talking about impairment losses recognized in the statement of profit and loss. Yeah, we need to disclose for each class of intangible asset. Yeah, if you have different classes of intangible assets, with respect to which class impairment loss has been recognized. Earlier, for other than 1 and 2, it is mandatorily we have to disclose with respect to which class we have recognized how much amount of impairment loss. That is not necessary now. Yeah, level 4, I said impairment loss standard only not applicable for them. Then obviously these two, disclosures also not necessary, right? Next here, this is also enterprise is encouraged but not required to give description of any fully amortized intangible asset which is still in use, like PPE, which the net value has become 0. Net value has become 0, but still that respective software or respective license or still whatever it is with us in case. All right, that information not required, like accounting standard 10 for level 2, level 3 entities. And with respect to accounting standard 28, yeah, here accounting standard 28, as I said, it is not applicable with respect to level 4, right? It is not applicable with respect to level 4, that micro entities at all. Impairment of assets, right? This is with respect to measurement. Yeah, level 2, level 3. Yeah, you can measure it on value in use. You don't need to go and check for NRV, net realizable value. Yeah, as you know, recoverable amount, when we refer, recoverable amount is nothing but value in use or net realizable value, whichever is higher. Yeah, we can do the recoverable amount. You can measure it value in use on the basis of reasonable estimate instead of computing the value in use by present value technique. You don't need to follow present valuation, just value in use. What is estimated, how much I will be able to recover it in the life of the asset. That way, that calculation is sufficient. This is with respect to measurement. Next, just the reasonable estimate, not the detailed projected cash flows for 5 years, all right, and terminal value. That is all not necessary to compute. In case impairment indicator, if the entity can see, then obviously this impairment standard, if it is applicable, when is it applicable? When there is an indicator, whether it is external indicator or internal indicator, correct? Maybe because of the COVID, our business is falling down, right? I may feel that my asset may not be useful. This asset may not be able to bring me such amount of, my carrying amount is huge, but I'll not be able to get that money over the life of this asset. Yes, under that circumstance only we will be applying. But here, even for the companies also, you will see in very rare cases accounting standard 28 application impairment. Right? That, very rarely, very less number of companies do use it, and even the auditors also will forced to comply only when there is a very apparent indicator. Otherwise, very less applied standard, actually speaking. Next, and because of this, consequently, if level 2 and level 3 chooses to measure the value in use, not using this discounting, right, then obviously the relevant provisions of accounting standard 20, such like discounting rate, obviously they have not mentioned the paragraph wise information. If I say I don't want to apply the discounting factor, present valuation technique, I just want to apply my reasonable estimation, what do I can get in the future, then sufficient that all related paragraphs are not at all necessary to be followed. That information, we can just say that, right? Further, but that's what I said already in the beginning. If the entity is taking up any exemption, right, then they have to disclose that. They have to disclose in the notes to financial statement. This is the, these are all the exemptions with respect to accounting standard 28. Accounting standard 26 has been taken by us. That information has to be provided mandatorily as per the notification. Further, any is that they don't need to disclose 121G paragraph information. Yeah, this is 121G paragraph information for our information. Yeah, here impairment loss of either individual asset, yeah, or a cash generating unit, which is recognized or reversed during the year, yeah, is material to the financial statements, then that entity, yeah, you have to give with respect to individual asset, what is the reportable segment it is coming from. Yeah, but reportable segment is obviously not applicable to, it is not applicable to all of them, like 2, 3, 4. It is linked to the other earlier exemption. That is the reason they have given, right? We have taken one individual asset or one CGU has been impaired. That CGU or that individual asset is pertaining to which segment? That information we are supposed to provide. That is not necessary. That is the exemption it is given to us. And with respect to that, you have to give the description, what is the amount recognized and which class of assets with respect to which reportable segment, right? Whether that reportable segment is it a primary business, primary segment or secondary segment. It's all linked to accounting standard 17 disclosures, right? And some more encouraging, not mandatory disclosure that were also, relaxed. We don't need to give this information. The last one, 123, the enterprise is encouraged to disclose key assumptions to determine the recoverable amount of asset. Yeah, recoverable amount, that is not relevant because they have given already an exemption saying that you don't need to calculate fair value, you don't need to calculate apply the present value technique. 5 years information, 5 years information you don't need to calculate. That is all not necessary. Automatically this paragraph is not required to be disclosed. And let's come to the accounting standard 29, which is provisions, contingent liabilities and contingent assets. Yeah, this exemption is again purely only related to disclosure. Standard is pure 100% applicable to all the entities. Entities have to make the provision if there is a liability on 31st March because of the past event which they are supposed to settle it, where there is no way to skip such obligation for them as on 31st March, right? Then application is mandatory, but disclosures related exemptions have been provided. As I was mentioning in the beginning, I was saying like the movement of the provision, that is opening balance, additions, deletions, any reversals, because we have provided excess. So I'm not using that provision, I'm reversing it. So the closing amount, that that table format, generally what we give for the companies, that is not necessary. That is not necessary. Not required. It is exempted. And the other information also was required earlier. A brief description of the nature of obligation. Correct. If it is gratuity related provision or such kind of employee related provision, anyhow we'll give, that's not necessary. Say example, provision for warranty. Provision for warranty, any other kind of provision, we have to describe what it is, right? What is the indication of uncertainties and etc. that were there. Now it is not necessary to disclose. Correct. The uncertainties with respect to what level it can fluctuate, that is what they wanted us to disclose. It is not necessary now. And the amount of any expected reimbursement, right? Stating the amount of an asset that has been recognized for the expected reimbursement. As we know, there is a small exam. If you are expecting a reimbursement from any other entity, we have incurred some money. Yeah, we already recorded it. Amount is supposed to come from other party. Yeah, for the expense, whatever. But if there is no document is written that, the other party is liable to pay me something like that, we can recognize it only when there is a virtual certainty. That's what the standard says. Only when there is a virtual certainty, then recognize it as a reimbursable asset. If there is no virtual certainty, you should not take that as an asset into books of account, right? So that, if you are expecting any reimbursement, expected reimbursement would have not been recognized, right? Unless until there is a virtual certainty, that information was required. Now it is exempted for the entities, right? And here, we are coming almost towards the end. These are purely disclosures, and that is what more about this announcement, right? Accounting standard 14, that is for amalgamation, right? And a financial reporting of interest in joint venture. Yeah. So if we have invested, joint venture arrangements, if there are any, this is not applicable for level 4 entities. Fully amalgamation concept not applicable, you can say. And joint venture related also not at all applicable, right? But if it is required by, it shall apply the requirements of relevant standard. If there isn't such transaction takes place, straight away we say this is not applicable, unless until, obviously this, unless until it takes place only, something is you are supposed to apply. Otherwise, not mandatory. That is what the last line of it says. Yeah, these are all exemptions for level 2, 3, 4, which we already discussed. AS 21 consolidation, 23 investment in associate, and the last one, 27 and 25. It do not require a non-company entity to present. Correct. Obviously, consolidated financial statements, it doesn't need. Yeah, but unless if a non-current entity, non-company entity, whatever, non-company entity is required or elects to present consolidated financial statements, yes, then you are supposed to follow. Standard does not mandate you to follow, but if the entity, they themselves, they want to prepare consolidated financial statements for any reason, then obviously compliance of these standards is going to be mandatory, right? And as I said, like guidance note on tax audit, yes, it is the members' duty, right? We are supposed to examine the compliance with all mandatory accounting standards while conducting the correct audit. So that is, even for the tax audit purpose, even we are signing for 3CA, 3CB. Yeah, if it is already done, obviously for the forms and all, 3CB you will be applying, right? So even for that purpose, compliance of accounting standards is going to be mandatory, right? So what about LLP? Right, LLP is supposed to, LLP is also going to be, LLP should follow which accounting standards? Is it which is recommended by, or recommended by the council, or recommended by the MCA, right? So here it's very straight and clear, simple. LLP should follow accounting standards announced, which are notified by MCA, under section 133. All right. They are supposed to follow all those standards. For them, this exemptions and all not applicable for those LLPs, basically, sir. Sir, I'm through with this. It did not take too much time to ask. All right. Any questions?
Members, any queries? Unmute yourself. And you can ask directly to the speaker. Or you can put it in the chat box also. It's better you interact with the speaker directly by unmuting yourself. Any queries, members? Members, are you able to unmute yourself?
Sir.
Prashant, I am audible now?
Yes, sir. Yes, you're audible.
Yeah.
Sir.
Okay. So no response from members. I think my voice is clear. So thank you very much, Ravi Kanth garu. Really have covered a lucid presentation with the extensive coverage of all the applicabilities and exemptions and all this. So this shows the members' doubts also cleared in your session. The complete session cleared all the doubts in the minds of members attended now.
Thank you, sir. Thanks a lot.
Thank you very much.
Thank you for this opportunity.
It's our pleasure, sir. It's our pleasure to have a session with you in a short time.
True, sir.
So it's really nice that you are addressing our Sikasa also, the students, and giving, I think, 2 or 3 sessions you attended for our students, I think, Visakhapatnam
Yes,
branch.
Yes,
So really,
sir.
so nice of you, sir. So nice of you. So I request Secretary Prashant Kumar to propose vote of thanks.
Respected Chairman, CAS Murali Krishna garu, Land Speaker, CA Ravi Kanth, Miriyala, senior members, and other dignitaries, good evening to all. I am privileged to propose vote of thanks for this session on my own behalf and behalf of Visakhapatnam branch. Sir, I convey my sincere thanks for accepting our invitation and share your knowledge and experience with us. Sir, your deliberations on accounting standards, applicability for non-corporate entities are excellent, and your deliberations are very much useful to all our members. Your special focus on the applicability, from the applicability up to various categories of the accounting standards are extremely covered and extremely covered and excellent. I convey my heartfelt thanks to you and all our members for joining this session. Thank you one and all.
Members who have one session on forthcoming program is on Wednesday, the 11th August, from 5 to 8 p.m. Workflow automations and reporting technologies by CA Swaroop from our Visakhapatnam branch. So I request members to attend for this unique program other than our academic or professional subject related topic. So for the benefit of members, we are also planning to have some unique topics like this. And this is one among them. This is accounting, this workflow automations and reporting technologies. Our CS Swaroop from our Visakhapatnam branch will be handling the session. So I request all the members to attend and get benefited out of this session as a new topic, which is not academic or professional, but useful for our professional life. So thank you. Once again, thank you very much, Ravi Kanth garu,
Thanks,
for
sir. Thanks a
your
lot, sir.
time and effort for our Visakhapatnam branch.
Yeah, thank you, sir.
So thank you,
Thank you,
Ananda.
Ravi garu.